Hey YouTube, welcome to this video, and today I'll discuss about the NIO stock, all about its products, recent news, management and financials. So NIO stock is going down because of an announcement. Last week NIO announced that it's gonna halt its production because of semiconductor market shortage. As you might know, the semiconductor industry is facing a huge shortage for the last couple of weeks. This shortage will definitely open a lot of new doors in the industry. Maybe some kind of 3D printed semiconductors will replace the old models, like NNDM is also doing the same for circuit boards. So recent sell-off is just temporary, and whole tech industry is based on the semiconductors, and it's certainly not going to be long lasting thing. But for now, yes, people are fearful. They are just selling the stock because they are thinking the company may go bankrupt, but it's not going to happen for NIO. At least NIO has plenty of cash, so don't worry about the NIO. But yes, NIO has certain other issues that I'm going to discuss about in the end of this video, so don't skip the video, watch till the end, and don't forget to subscribe and hit the like button. NIO has been outperforming since 2020. After the pandemic, it picked up the race, and that's not because of the car sales. It was due to the bailout in April 2020 by the government, and NIO raised $1 billion in cash in that round. So this is Chinese Tesla, and it also has an autopilot feature. But remember, this autopilot feature should not be compared with the Tesla autopilot, because Tesla has logged more than 3 billion autonomous miles, which is a huge amount to train an autopilot machine learning program. NIO is focusing on building user experience and providing some other services as well, like NIO House, which is a place for owners to meet the NIO community, and they can share ideas, sit together, work and enjoy the rest of community. And this idea literally caught my attention, that they are just trying to make a Gucci gang like thing, which means they are focusing on building a brand loyalty. So NIO is not the only EV player in China. There are a lot of others, but they are targeting price conscious customers. NIO is a bit more at the luxury side and building itself more like a brand like Tesla. Although the other manufacturers are getting more sales, but NIO is also increasing the sales in the recent quarters and sold almost 17,000 cars in Q4 2020, and in current quarter they set a higher target of 20,000 plus cars. So I think they are going to achieve the target this time as well. Moreover, NIO will target the Middle East, Europe and Asian countries, so that's how they are going to get more sales from the most populated areas. So from the product side, 3-minute battery replacement thing is certainly a disruptive idea. You just go to the spot and replace the battery in just 3 minutes, and that's it. It's certainly an amazing thing for those living in apartments having no spot for charging their vehicles. They simply can go to the nearest spot and replace the battery every day in just a 3 minutes. So as most of the population live in apartments and large buildings, or parking issues are pretty much obvious, this feature will help overcoming the range anxiety obviously. If we talk about the industrial factors, it's not about the NIO versus Tesla, because it's all about the market gap. So for now, we are here in 2021, and this is going to expand exponentially in this decade. So certainly NIO is going to get its share from this market, and it will grow and expand in the coming years. But here's the thing, NIO does not own a manufacturing plant. It has a joint venture with JAC Motors, and they are manufacturing vehicles, and this is how NIO saved billions for marketing and advertisement, which is going to generate sales and revenue in the longer run. Now let's move towards the financial analysis. After recent filing, their revenue and earnings are increasing. As you can see in the graph, revenue has jumped from 1.1 billion to 2.3 billion dollars. These values on the graph are in Chinese currencies, and I'm telling you in the USDs. So their earnings are still in the negative value. They have missed Q4 earnings for 2020 as well. Moreover, the company has total 38 billion RMBs in cash and owes only 6.3 billion of debt, which means the cash to debt ratio is 6.03. It's a very good number for any company to be a solid one. Furthermore, the company is recovering from operational losses. In 2019, the value was negative 11 billion, which was reduced to 4 billion. And these values are in RMBs, just to keep in mind. And according to CFO Steven, the company has achieved positive cash flow for 2020 in the annual report, but I couldn't find the cash flow statement in the report, which was quite unusual, at least for me. And now let's talk about some ratios and find out the company's solvency. Its current ratio is 3.3, which means they have more assets than liability. The absolute liquidity ratio is almost 3, because NIO has got plenty of cash and their liabilities are literally tiny as compared to cash, which means it's not gonna go insolvent in near future. And their institutional ownership is almost 36%, and I'm not expecting any insider trading information because it's a Chinese company. So now at the very end, I'll talk about the management a little bit. William Lee is the founder, chairman, and CEO of the company and holds almost 14% of the shares. And he also founded Bit Auto Holding in year 2000, but it was sold in 2013. He has also won various awards and honors for this notable work. People call him Elon Musk of China. Obviously, people are also calling this company the Tesla of China. So it's a quite obvious thing. Finally, I would need to talk about the stock value. So when I see the valuation and all other stuff, it looks amazing and the product itself is good enough. But if everything is perfectly aligned, then why this stock is cheaper? Because NIO could go to 1000 easily, but NIO is a Chinese company and there are certain risk factors that we cannot eliminate. So fundamentally, it's all about political factors. Investors think it can be delisted and selling in OTC is quite a heavy task. They are just staying away from this stock. Obviously, I explained the whole thing in another video as well. This stock is basically a variable interest entity in Cayman Islands, so investors are pretty much reluctant to invest in a company that you cannot own. Basically, you cannot own the company in China because of the Chinese law. That's why NIO Cayman Island has no authority to own a Chinese company. So it's just a contract which allows NIO Cayman Island to receive profits from NIO China. So it's a bit complex thing. If you want to learn more about this factor, just watch my other video. I would add the link in description as well. So investors are always underconfident to invest in this stock, and that's the reason this potential Tesla stock is still underperforming in the market. Otherwise, this stock was already 500 plus, not just for 45. And the same thing is happening with Alibaba. It's so undervalued despite the better revenue and earnings than the Amazon. It's literally $230. But still, I personally believe that stock is going to reach $100 in the current circumstances, which is 10 times lower than the actual potential. But don't forget, I am not a financial advisor and you must need to do your due diligence before investing in the stock. So that was all for the day. Don't forget to subscribe to the channel and hit the notification bell on, and also comment down below your thoughts about this potential Tesla stock. I'll see you in the next video.